If you have clicked on this video, chances are you're seriously thinking about investing in Dubai real estate. And you have this big question, should you go for a ready property or buy something under construction? See, both options definitely have their pros and cons, but stick with me because by the end of this video, you'll know exactly which one makes the most sense for your goals. I'm going to break down all the key differences, the advantages and the disadvantages of each. Basically everything you need to help you decide where to put your money in Dubai real estate. So hello and welcome to Decoding Dubai Real Estate. Let's dive right into it. First up, ready properties and their advantages. The first advantage is immediate possession. You see it, you buy it and boom, you get the keys. Literally, you could be moving in with your family tomorrow or start generating rental income the very next week. There's absolutely no waiting around, no wondering if it'll ever be completed. It's yours right now. Second is total transparency. Forget about needing a vivid imagination here. You can actually walk in, check out the unit yourself, see the exact layout, take in the view from the balcony, check the building quality, inspect the amenities, and you can even see how well the building is maintained. Forget about those fancy brochures. This is real life. What you see is exactly what you get. Third is informed choice. Because you can physically inspect every single thing, you can make a super informed decision. Is this building genuinely right for your family? Will it honestly generate that high rental income you're aiming for? When you buy a ready property, you'll have that certainty, which is pretty priceless if you ask me. But it's not all sunshine and rainbows in ready properties. So let's also talk about the drawbacks of ready properties. First is limited choice. In Dubai, developers usually don't have much inventory when it comes to ready units. Most of the time, you'll have to buy from the resale market. And what does that mean for you? Well, it means you might be limited to just 1 or 2 units in an entire building. So that dream floor, that perfect layout, that specific view you have always wanted, you might have to compromise on one thing or another, which can be a bit of bummer if you ask me. Because what's the point of spending that much money if you don't get the flow you want, the layout you love, or the view that you have always wanted, right? Next drawback is no flexible payment plan. This is huge for international buyers and something you really need to be aware of. Since these aren't directly from developers, those amazing 3 to 5 year payment plans you hear about, gone. In most cases, you're looking at a full payment, or even if you're thinking about a mortgage, home loan as an international buyer, that usually maxes out around 60 to 65%. This can significantly impact your investment. Next drawback is lower return on equity. When you buy property with cash, sure, you get steady rental income, but here's the kicker. Your return on equity stays low. Why? Because you're using 100% of your own money. Every dirham is working, but let's be honest, it's not working as hard as it could be. So yes, paying in full feels clean and straightforward, but your money is working slower, not smarter. So next drawback is higher price. In prime and well-developed locations, ready properties are typically priced at the highest per square foot. Owners know the value of a well-maintained building in a good community. And if that unit has a clear view, the seller will absolutely charge you a premium for it. You're essentially paying for the immediate convenience and established location. So if you have 100% of the funds ready and you don't mind the higher price and you just want a steady rental income or you want to move immediately, then a ready property is a good choice for you. But for a lot of first-time investors in Dubai, there's another, more strategic option available. Up next is the exciting world of off-plan, under construction properties. This is where many investors genuinely find their biggest wins in Dubai real estate. So let's break down the advantages first. First is more option. Imagine stepping into a brand new tower with say 500 units and guess what? All of them are available for you. You literally get to cherry pick the exact layout you love, the perfect size for your needs, that specific high flow view you have always dreamed of. You are the decision maker here, not limited by just a handful of resale units. It's a fantastic feeling to have so many choices and no compromise in anything. Next advantage is flexible payment plan. Honestly, this is arguably the single biggest advantage when it comes to off-plan. Developers in Dubai often offer payment plans stretching up to 8 years. Think of it like an interest-free loan directly from the developer. No banks involved, no complex paperwork. Just imagine this, a 1 million dirham property and you could be paying for it over 8 years. How cool is that? And the next advantage is affordable entry. This is a total game changer. Instead of shelling out 100% upfront like you would in a ready property, you could just start with a 20 to 25% down payment. That means with just 250,000 dirhams, you are opening the doors to premium properties that would otherwise be completely out of reach. Suddenly, high value investments become far more accessible, especially for first time buyers. Next advantage is higher returns and capital appreciation. Newer properties with modern layouts, fresh amenities and smart features naturally attract better rental income, plain and simple. But real edge here is long-term appreciation. As the surrounding area develops with brand new malls, schools and infrastructure popping up, your property value naturally rises too. It's a super smart way to position your investment for future gains. Off-plan investing definitely requires patience, but there are a couple of things you really need to be mindful of. Up next is the disadvantages of off-plan properties. First is long wait time. Buying under construction means you're often waiting anywhere from 3 to 4 years, sometimes even longer, before you actually get the keys. And if you're renting in the meantime, you're likely juggling both rent payments and installment payments together. This is precisely why solid financial planning is crucial. In fact, I have made a separate video breaking down the payment plans and the 4 types of investor profiles, so you can figure out which payment plan fits your unique situation. You can check that out after the video, the link will be in description. Next disadvantage is delayed returns. If you are buying purely for investment, then you won't get any rental income until the property is ready. For those 3 to 5 years, your cash is indeed going in, but there's no monthly return coming back. But here's the amazing upside. During this time, what you're getting is capital appreciation. And as you know, it is as important as rental income, if not more. As the project nears completion and the area truly develops, your property value is steadily rising. So by the time it's ready, you're already sitting on a significantly more valuable asset. The name of the game here, my friend, is patience. Now let's talk about one of the biggest and most exciting advantage of investing in off-plan properties: return on equity. This is truly where smart investors make their biggest wins. Here's a quick example. Let's say you're buying a property worth 1 million dirham and the developer only asked for 30% of the total cost during the construction phase. That's just 300,000 dirham out of your pocket right now. Now fast forward 3 years. By the time the project is ready for handover, the value has realistically increased to, let's say, 1.5 million dirham. And let me tell you, that's not uncommon at all in Dubai's rapidly growing market. If you decide to sell before handover, you walk away with a whopping profit of 500,000 dirham on an investment of just 300,000 dirham. That, my friend, is an incredible 166% return on equity. Try getting that kind of return on ready property. It's simply not happening. Now, let's say you don't sell. Instead, you decide to hold on to the property and you pay another 20%. That's 200,000 dirham on handover. And the remaining 50,000, that is 500,000 dirham over 3 years as post handover. At this point, you get the keys and the property start generating rental income. Let's say a healthy 80,000 dirham per year. Your total invested capital up to this point is just 500,000 dirham. That's your initial 30% during construction plus 20% at handover. So you're earning a fantastic 16% rental return on your actual equity, which is double what you typically get if you had paid the full 1 million dirham upfront for a ready property. This, my friend, is the incredible power of leverage with off-plan properties. Lower capital outlay, significantly higher returns, and the ability to grow your wealth much faster. So let's recap. Making a decision whether to invest in a ready property or under construction property really comes down to your unique financial situation and your investment horizon. If you have limited initial funds and you are aiming for high capital appreciation and you want to truly maximize your return on equity, then under construction is hands down the best choice for you. But if you have 100% of the funds ready, you need immediate possession and you want instant rental income and absolutely don't want to wait, then a ready property is perfectly suited for your needs. Now, I want to hear from you. Which type of property are you leaning towards and why? Drop your thoughts, questions, or even your real estate investment experience in the comments below. And if you know someone who's thinking about investing in Dubai real estate, share this video. And don't forget to subscribe for Dubai Real Estate Insights. And as always, happy investing. I'll see you in the next one.